Welcome everybody to the Daily Recap Show where we talk about stocks and the financial markets. My name is Chase. If you like this video, please subscribe, hit that notification bell as well as the like button and leave a comment for the algorithm. Let's get into it. This is the daily heat map of the S&P 500 and US stocks climbed towards their record highs on Monday amid promising signs that a US-China trade deal is in the works amid Trump's long-awaited meeting with President Xi later this week, and stocks were green, led by the mega caps. We saw Google and Meta very positive on this news. Amazon and Tesla also very positive on the same news. Apple, Nvidia, AVGO, all of semiconductors, Microsoft, and infrastructure except Oracle. Oracle didn't participate, but everywhere in the tech sector was very green. The mega caps led, software followed suit. Other than that, it was mixed in the broad market, but still broadly green when you look at it. In fact, there was only one sector that wasn't green today. It was the material space, and that's because material stocks, rare earth stocks, were rallying on US-China trade tensions. If that eases, it's going to impact those stocks substantially. We also saw gold take a bit of a breather right here because today was risk on and every single sector gained. Look at the low end right here: healthcare, real estate, staples, right? These are your quintessential defensive sectors. They were the worst performers, still green, but your worst performers. The best performers were tech, XLY, XLC, your sensitive sectors, your cyclical sectors, with the S&P 500 up 1.18%. Very solid day today. Growth outperformed, but it was green through and through. Large cap growth really outperformed, but you saw growth in mid caps, growth in small caps really take it on the chin. But you saw growth in mid caps, growth in small caps also participate. Small cap core also participated as well, and then the value segment lagged behind but still green through and through. And here's a quick photo of the dinner the bears were eating on the announcement of Donald Trump coming out and saying he is confident in a trade deal after successful China talks. This is what spurred the rally. We then had China's Vice Minister of Commerce come out and say that the US and China have reached a consensus key deal on certain trade issues after candid, successful, and constructive talks. Discussions covered export controls, tariff suspensions, fentanyl-related measures, and more. Both sides will now begin internal approval procedures. But it wasn't just this. Vietnam also agreed to a framework for a trade deal, as well as Thailand agreed to a trade framework covering 99% of goods. And when you get this type of news all in one weekend, Monday is going to be the blow off top we got today. I thought we were going to fade into the close. We did not. Very strong into the close, led by the mega caps. It's what you like to see. But it wasn't all sunshine and rainbows, guys. Rare earth materials, stuff like MP Materials and USAR, took it on the chin today after China said it would not curb rare earth exports. These stocks rallied on the back of those curbs coming into place, and so these stocks were down. However, I do think this is a buying opportunity because this entire space over the next decade is going to be very strong as the world tries to onshore its own rare earth material supply. Qualcomm was up 10% today, and at one point up 20%, hitting the $200 mark after it unveiled a chip to compete with AMD and Nvidia. The reason why the stock was up because this is not in the consensus earnings forecast for the next couple of years, and this is pure upside for Qualcomm. Nvidia and AMD on the back of that news were actually pretty positive, both up about 2.2% respectively, so that didn't deter the conviction in these two names. And then Robinhood Markets, ticker symbol HOOD, was up 5.28% after Compass Point raised their price target on shares to 161 from 105, citing revenue from equity transactions, prediction markets, and crypto fees, all beating consensus expectations this month and this quarter. Then for everything we saw today, it was 3,100 advances, 3,200 decliners. So market breadth kind of mixed, right? We saw outflows here in the Nasdaq 100 and the New York Stock Exchange. However, if you measure the gap up from Friday, we actually saw inflows in the market with the S&P 500 up 1.23%. Market momentum continues to remain solid. Remember last week, we were looking at these figures right here saying things were not looking too good. We need to recapture these medium-term moving averages we have, and everything is looking solid across the board. Shorter-term, medium-term, and longer-term averages point honestly towards higher prices in the future. And again, any time we get something like this, as long as the longer-term averages don't fall overall, it is simply a buying opportunity, and we see that time and time again. Now guys, looking at the charts right here, you can see definitely was a day for the mega caps, the S&P 500 and the Nasdaq 100 outperforming, but also a green day in the broader market. But again, concentrated here in the big tech names. We saw growth outperform value, but green through and through. European stocks gained, some with Middle Eastern stocks, Chinese stocks, Indian stocks. It was a rally globally. Crypto didn't participate in today's rally, kind of flat here today. Bitcoin slightly up. However, if you measure what happened on the weekend, crypto is up about 4%. So very solid stuff in Bitcoin at the 115,000 mark. Ethereum going from about 3,800 to where it is right now, 4,150. Very solid momentum in the crypto space over the weekend. Yields were mixed. The 2-year yield was up, 10-year yield was down. Volatility ticked down. We're now at 15.8. We were at 20 VIX just a couple of weeks ago. Treasuries rose ever so slightly, and then we saw a clear rotation out of gold, out of materials, right into risk on assets like equities. And look at the weekly chart here of the S&P 500. We have a weekly gap up, as you can see right here, and then a gap up and rally, closing pretty much at the highs right here. But the weekly chart is not the chart we want to look at. We want to look at the daily chart, as you can see right here. And again, so we had a gap up here on Friday and a move, and now a gap up here on Monday and another move, closing pretty much at the 6875 area. Absolutely insane. It turns out now that the 6500 area right here, this was a dip buying opportunity, and now this is October, and Q4 seasonality continues to tell us that we will go higher and probably will reach that 7,000 level here by the end of very solid. And I do think if we do get a dip even to the 6700 right here, if we do get a dip, let's say the market is to just dip right here, this would be a dip buying opportunity for us to probably go ahead and reach that 7,000 area. Is it going to happen? I don't know. We'll see things looking a little bit frothy. If we do just pull up the RSI right here, the relative strength index, you can see we're pointing right at that high level right there. So not quite. So we could probably have a couple more days of rally and take a bit of a breather, but ultimately the trend is your friend, and we are looking for us to go significantly higher. If we do get a major pullback, let's say a major drawdown, the line I'm looking at for us to find support is the 6130 area. I'm not saying it's going to happen, because it is a significant correction that we will get from these highs to these lows right here. You're looking at close to an 11% move, but this is where I'm looking at support. The reason being is because this is where we actually found support when we made these highs right here in early 2025 before the tariff tantrum dip. We do know that resistance previously turns into very strong support, and that's if we do get there and bounce off these levels to the upside. 10% pullback, it happens. We normally get one per year. We've already had one this year. Maybe we get that sometime in 2026. That being said, the trend is your friend, and you definitely don't want to fight this trend right now, because markets, stocks, crypto, even commodities, stuff like gold, just absolutely on fire. Same with the Nasdaq 100. You can see like gapping up to all-time highs, staying there and closing at all-time highs. The Russell 2000, not quite, sort of at these highs right here. Definitely strength in these mega cap names. The RSP trading at its highs as well. All these indices look really, really good, but we're seeing clear outperformance here in the S&P 500 and the Nasdaq 100. You know what's also lagging behind? Cryptocurrency. I mean, while the S&P 500 and Nasdaq 100 are at all-time highs, Bitcoin continues to remain pretty much in this range, pretty much at all-time highs. I mean, the all-time high is 126. Bitcoin's trading at 114. So it is about 6 or 7% away from those all-time highs, but not at the highs like we're seeing in the Nasdaq 100, in the S&P 500, and the same with Ethereum. It's about 6 or 7% away from its all-time highs, but trading inside this consolidation range right here, bouncing off this very key level, which was our base case. We said we're looking for a bounce off here and probably a rally, and then we'll make our next move to the upside or back inside this channel. We'll have to see what the price action looks like when we get to this level. That being said, I am bullish on Ethereum. I am bullish on Bitcoin, and I say pretty much every single video. Stock I really like right now is BMNR. I think if you could get this under the $50 mark, we're going to see probably a triple-digit return. Price target, probably $100 in 2026. BMNR was up 6.55% today. Very, very solid price action right there. And I think today was even a great day to probably lean into some of these AI names. APLD was a name I said that you ultimately want to be buying the dip right here. It was up 2.75%, but some of these other names weren't as bullish. EOSE was down 4% today, right? When we look at something like BITF, Bitfarms, it was down 1.52% today. When we look at something like Plug Power, another AI name, Supplied Power, it was only up 0.34%, up 1% here in the after hours. So I do think
these are still great plays. They're at like very, very key support. I do think we probably will go ahead and retest these highs sometime in 2026. As long as AI spending continues, these names will continue to go higher. They just need to consolidate some of the big move they've seen right here, and that's exactly what we've seen. But again, when you take a measured move, right, like peak to trough, some of these names are like 30-40%. So we probably should find support right here, trade sideways for a bit, and then onward and upward. AI plays are still the name for this market. I still do like NBIS if you want neo cloud providers. NBIS is a really, really good name. It absolutely outperformed today, up 6.97%. And then CoreWeave, one of the biggest actually the biggest neo cloud provider apart from the hyperscalers, was up 2.65% today. But ultimately, CoreWeave is consolidating the massive IPO move we've seen right here. So expect more of the same, just more consolidation sideways. But ultimately, we probably will go ahead and take out those highs right there. But guys, I remain constructively bullish on AI, tech, on the market as a whole, despite elevated valuations. I also remain constructively bullish here on cryptocurrency. I think I'm not super bullish on like gold and silver. I've been saying for a while this rally looks a bit cooked, but I do think we probably will go lower. I wouldn't be surprised if we get back to this 317 level right here. This is where ultimately we want to buy now. We may miss the buying opportunity, but ultimately we're looking for a move right here, and then we can probably consolidate for a while and then make our next move higher and go from there. In gold, very similar here. For silver, you could probably look at the 35 region as your next level of support for silver. TLT, if you want to lean into bonds, probably the play. I mean, we're definitely seeing momentum in bonds. Rate cuts are coming over the next couple of days, months, and in 2026. And that should help longer term treasuries, but ultimately you're still getting a pretty good yield out of these shorter dated treasury bills. So it's probably good to still keep your money in a high yield saver versus some of these longer term treasuries at the current moment. But ultimately the place to be is equities, risk assets. And I do think we go higher. We're in November, a very bullish time period of the year, onward and upward.
Guys, and diving into sentiment, the fear and greed index continues to remain in this fear zone right here, while stocks are at all-time highs. And when that is the case, normally it's bullish because it shows strong underlying demand for assets. However, skepticism in sentiment. Honestly, this is just fuel for further gains as cautious investors eventually rush back in and chase the upside. And if we look at the next couple of days, guys, when we look at this seasonality stack right here, it's the S&P 500 and NASDAQ Halloween trade performance, which is the final 4 trading days of October, which starts Monday, and the first 3 trading days of November. And it has a super positive rate, 25 up, 26 down, average return just under 2% in 7 trading days. That is absolutely exceptional alpha. And then for the entire month of November, we are looking at seasonality that tends to be very positive. We are about to enter the end of Q4, the November, December, and Santa rally run. And guys, in this period, you definitely want to lean long, especially when we look at earnings season. Earnings looking very good. If you actually just remove the energy sector, 11% earnings growth, 7.3% revenue growth, 87% of companies beating the analyst expectation. Bullish stuff. And when you look at the macro, there's mixed signals, but a lot to love. For example, the weekly economic index. This series has become one of my favorites as it has consistently indicated no recession and relatively healthy growth since the pandemic. More importantly, the 13-week average is at 2.4%, remaining not far from the 2.53% reading in May, which was its best since 2022, continuing to evidence the overall economic momentum is above trend. At the same time, though, the labor market is weakening. We know that for short tax receipts at 0.1% growth here for the month through October. Not a healthy sign. Overall, the 12-month figure looking really good, but this is ultimately why we're getting rate cuts. The Fed realized the economic data and the labor market is weakening ever so slightly, and rate cuts is going to help the underlying economy. Now, looking at data for the rest of the week, tomorrow the big names are going to be Visa, right? PayPal so far, United Health Group, DR Horn. Those are the big names. There's a couple of smaller names, but they're really going to move the market, especially in the financial space. Your Visa, SoFi, PayPal, right? Some of the healthcare names reporting as well. In terms of data, we don't really get anything. I think the big thing we're really going to be looking out to is the Fed FOMC here on Wednesday. We're looking for a 25 basis point rate cut from Jerome Powell, guys. But if you've made it up until here, thank you so much for watching. If you like this video, please subscribe, hit the notification bell, as well as the like button, and leave a comment for the algorithm. Cheers.